The Australian property market is red hot right now, driven by housing supply at record lows. We're just not building enough homes, builders going broke, making it harder to build enough homes, and massive demand as a result of record levels of migration. But there's a new source of demand, and this source will drive property prices higher almost regardless of what interest rates will do. And what is that new source of demand? That's exactly what we're going to cover today. Hi, it's Nero here, and if you think there aren't enough properties right now in Australia, this situation is only going to get worse. Here's why. Chinese buyers are returning to Australian property. Chinese buyers are once again snapping up property in Australia, further fueling resurgent prices in everything from luxury homes to tiny student apartments. Buyer inquiries from China for Australian properties jumped 127% in the first 3 months of the year from the final quarter of 2022, according to data from real estate firm Juwai IQI. We expect Chinese investment in Australian real estate to climb at least 30% in 2023 from 2022, said Daniel Ho, co-founder of Juwai IQI, which helps sell foreign properties to clients in Asia. Chinese buyers are back, and more will come in the second half of the year than in the first. That outlook is likely to concern Australian policymakers who are already shocked at the speed of a housing recovery following 11 interest rate increases in a year. Rising rents, limited supply, and population growth are driving property markets from Sydney to Perth, and a return of big spending foreign buyers will add to pressure on prices. And if you think rising interest rates will stop buyers from overseas coming into Australia, check this out. People still want to come to Australia, still want to invest here. Rising rates aren't a problem, not for international buyers from China. That's from Monica Tu, founder of the Black Diamond Z Group. So while rising interest rates may affect Australians and their borrowing capacity, people from overseas, they're just going to keep buying property, driving prices up. But it's not China that provides the highest number of buyers looking to buy property in Australia. Have a look at this. European home buyers outperform China in Australia's property market. Foreign property buyers are on the rise in Australia, with a new report revealing which nations are dominating the country's real estate scene. When it comes to foreign buyers investing in the private real estate sector down under, commonly Chinese, Indian, and Singaporean investors come to mind. However, research collated by global property insight platform Knight Frank has revealed that while investors from China and Singapore form part of Australia's foreign buyers market, the country with the largest number of home buyers purchasing Australian properties priced over $3 million Aussie is in a different continent altogether. According to the Wealth Report 2023, the UK has the highest number of residents who own a multi-million-dollar property in Australia, followed by the US. Now you might think, oh yeah, that's only for properties priced at $3 million and above. That's the upper end of town. It's not going to affect general properties in Australia. But Australia is a great country to live in. And so when people migrate to Australia, sure, they may initially be the wealthier people. Sure, they may be buying higher priced properties, but then they're going to bring their families across. That's going to add further demand to property. And sometimes they're going to be looking at more lower priced property. Either way, you have more demand being placed on Australia's already stretched property market. And that's only going to continue to put upwards pressure on property prices. But at least with all this demand from overseas, there is a silver lining for tenants. Singaporean property giant hits play on build to rent. Singapore-listed real estate and hospitality powerhouse CDL has joined the race for a place in Australia's rapidly evolving build-to-rent sector, with plans to begin building a total of 500 apartments at 2 projects in Brisbane and Melbourne within the next few months. The Singaporean player's move joins a broader acceleration across the $17 billion rental housing sector, with major property platforms such as Brookfield, Cedar Pacific, and ASX-listed Stockland flagging their first forays in the BTR or build-to-rent sector in the past month. Federal government tax breaks for offshore investors announced in the May budget are expected to galvanize further investment into the sector. So that means you've got overseas demand, people looking to buy houses to live. You've got major overseas players coming in to hopefully assist with the rental crisis we have in Australia and build properties that are only for rental. However, it still means that they're buying properties in areas around Australia. And remember, there's a massive land shortage in Australia. So what does this all mean for you as an investor? It means that there is going to be more demand placed on property prices, regardless of what interest rates do, regardless of what the RBA does. Almost all of these buyers from overseas are buying without needing to take a loan in Australia. And I know personally, I've had more people reach out to me from Singapore, Malaysia, and Dubai in the last few months than I've ever had, as they are looking for a good buyer's agent to secure them an investment property in a growing area. So for you, it certainly seems that if you can afford to get into the investment property right now, it's a great time to get in and ride that next wave of capital growth. Your job is no longer to try and time the bottom of the market. That was back in February. Property prices are now rising. Your job is to find where are the best places for you to invest that you can afford. And if you want help with that, click the link in the description below to get a free copy of both the audio version and the digital version of my book, Wake Up Wealthier. I'll see you next time.